And when I would tell you that Bitcoin, the enigmatic digital currency, is back in the spotlight as the U.S. banking system grapples with mounting stress. While some predict a stratospheric rise to 1 million% coin, fueled by economic woes, others remain skeptical. Bitcoin advocates see it as a beacon of stability in a storm. Unlike traditional assets tied to the health of institutions, Bitcoin boasts a finite supply and decentralized nature. This, they argue, positions it perfectly to benefit from a flight to safety scenario where investors seek refuge from a potentially collapsing banking system. And the recent history seems to support this narrative. In March 2023, the failures of prominent institutions like Silicon Valley Bank coincided with the 40% surge in Bitcoin's price. Within a week, industry figures point to this as evidence of Bitcoin's role as an uncorrelated asset class, a hedge against traditional financial turmoil. Further bolstering this argument is the latest report by the Federal Deposit Insurance Corporation. The report paints a concerning picture, highlighting a worrying trend of unrealized losses on securities held by U.S. banks. These losses, driven by rising interest rates, have ballooned to over $500 billion.
Additionally, the number of banks on the FDIC's problem bank list has grown from 52 to 63 in just 1 quarter, raising fears about the overall health of the sector.
While the potential for Bitcoin to gain value seems undeniable, the ambitious price target of $1 million faces strong headwinds. Experts warn that such a dramatic surge might get at the cost of a full-blown economic meltdown, a scenario that wouldn't necessarily benefit Bitcoin in the long run. Furthermore, Bitcoin's historical correlation with other assets is not static. While periods of weak correlation exist, there have also been instances of strong correlation, particularly during broader market downturns. This casts doubt on Bitcoin's ability to completely decouple itself from a struggling traditional financial system. Another factor to consider is the recent uptick in the M2 money supply, a metric representing the total money circulating in the economy. Historically, periods of M2 expansion have coincided with Bitcoin price increases. However, the interplay between money supply and Bitcoin in an environment with a potentially shaky banking system remains an open question.